Just talk to us at the moment about your business, if people aren't that well versed in Web3, is that you're ultimately an investor, more than 400 portfolio businesses, a lot of them non-fungible token gaming operated businesses, but you're also an operator yourself, you're an advisor yourself, you're helping NFTs get minted. If someone turns to you and says, but the NFT market's collapsed of late, what do you say?
Well, I say last year, $24 billion of NFT sales took place. In the first quarter of this year, $4.7 billion of NFT sales took place, so that doesn't sound like anything that's dead to me. More importantly though, 90% of all that value that was generated went to creators and owners of these NFTs. Now just take that for example, Spotify, which is perhaps one of the largest creator platforms in the world, in that same year last year, only paid out $7 billion. Musicians can't make money on Spotify, everyone knows this. But creators and artists and people in the gaming industry can make a living income with NFTs. The only thing is that if you're not in that space, then you wouldn't actually understand its power. And I think of it a little bit like China. I remember back when China was on the rise, when I was in Hong Kong, everyone said this growth in China isn't realistic, it feels a little bit sort of wrong, this growth is unsustainable, and look where we are today. I think it's very similar to that. People don't understand the open metaverse. It's very easy to sort of throw rocks at it, but once you enter it, nobody ever comes out.
Some would question whether China's economy has been rip-roaring as much as they would have wanted to see, but I get your point.
Yes.
It's the second biggest global economy now.
Yes.
I'm interested, though, that you've actually been diversifying to sort of show the power of, ultimately, property rights.
Correct.
Within teaching.
Yes.
Even as sort of online teaching gets disrupted by AI, they're now, though...
But it's a bit different, and I think this is what's interesting. So we helped launch this thing called Open Campus. Open Campus basically is a Web3 blockchain-enabled educational platform. But just to give you an idea of what happens, teachers in the world are now able to create the content that they create, which is maybe English lessons or music lessons, whichever, and then they can capitalize it because it's a kind of property. Content becomes an asset, and they can then sell this to someone who might actually want to partake in that yield that the teacher created. So that means that something that might only make $100 a year, someone might be willing to pay $1,000 because of the fact that it generates 10% yield. Now this is actually in and of itself not a revolution, but what's revolutionary is that now this level of asset can now become a capital asset that has capital formation. We've seen this with real estate, we've seen this with other assets, but it used to be too expensive. For instance, if you wanted to sort of buy something that has a value, you had to hire a lawyer, you had to have all this stuff. Now with a single transaction of an NFT, your legal rights, your contract rights, as well as where the money goes, can be done in a transaction that is less than $1.
Yeah.
And this means everything we do creatively online, all the data that we generate, becomes a capital asset.
It feels appropriate that children are currently singing from the Qatar Music School at the moment while we discuss how education has been disrupted.
Yes.
What's interesting about you is you're a deeply global business. You've been backing Axie Infinity, and that of course, big player within the Philippines, for example. Right. You yourself, your company, looking at where to call home from a regulatory perspective. Where would you say you should call home from a regulatory perspective?
I think Hong Kong's been great. I mean, Hong Kong has been really very digital assets forward. Think about what happened just in the last 6 months. Not only did it embrace digital assets, ever since there was trouble in the space, Hong Kong came out and the financial secretary said, this is important, we're regulating it, and we think this is the future of our industry. There's even this talk now that Hong Kong is going to open up retail crypto trading, for instance. They already issued their first licenses to companies out there, for instance. There's like, I think, 5 crypto ETFs. The Hong Kong Monetary Authority issued a tokenized green bond, which is probably the very first time a government agency anywhere in the world has tokenized themselves to some degree. So I think Hong Kong is a great place for that. And of course, we have to make the assumption that Hong Kong is not doing this without the permission of someone else, which to me has global implications, because this isn't just about what's Hong Kong doing and trying to attract talent to it. It's really what is the sort of greater China region and Asia doing in this space. Japan, for instance, Kishida-san, the Prime Minister, has also made Web3 in the metaverse a key part of his growth plan for the future of Japan.
A bit more of a macro perspective from you, but at this time where we're seeing the US worried about data flow to China, we're seeing the EU worried about data flow from Europe to the US, are we going to see that as an issue for Web3 ever? Is there going to be an issue of balkanization within the internet, within technology in general? Or will we always manage to see Web3 break through and be a truly interoperable space?
Sure. I mean, the promise of Web3 is that because all the data is now on blockchain, it doesn't belong to anyone. I mean, think about it just broadly speaking in what it means for the Ethereum network. Who owns it? Who controls it? And that's actually the beauty of it.
But also the issue for regulators.
Well, the issue for regulators on one hand, but for instance, I think in Europe, they can defeat many of their privacy issues if they actually embrace blockchain, which they're beginning to think about, as opposed to saying, with a big platform to say, oh, you have to sort of be, it's respect of privacy that's important, but at the same time, they're trying to restrict businesses. For instance, what they've been doing around sort of their privacy policies have made it actually harder for small companies to engage in the space because the regulatory framework became too expensive. Blockchain actually changes that and makes it more accessible to everyone, because it also means that the data, the point is that the data that you create, your data, which is your asset, you have the right to decide how it gets monetized. If our data becomes this digital property, this asset that is ours to control with, then we get paid for it. At that point, it's maybe okay that, some company monetizes it because we're getting our fair share. The problem is that we don't know what our data is worth because there's no regulatory framework that can actually say that data is an asset. We think of data rights actually almost like a human right, because all of the value in the world that's generated is through data. We worry about AI. Well, what is AI from? It's from the data that we create. We should have sovereign rights around this, and Web3 solves that, which is why we think it's the future of the internet.